We've all heard the little saying of it takes money to make money. The problem is with a lot of things, including business, stock trading, etc., you need a lot of capital to start out in order to start making those big profits. But with crypto trading, it's actually a lot easier to get access to capital with a small account to turn it into something massive over a short amount of time. If you know what you're doing, of course. So in this video, I'm going to show you exactly how I would take $100 and turn it into 10,000 using the same strategy I've learned over years of experience trading crypto. I'll cover how you can get access to capital really easily, the exact strategy I would use to safely grow your account, and a system you can use today to start taking profitable trades. Now, to start out, you're going to want to start with these simple rules. First, begin by risking a set percentage per trade. So this can be anywhere from 1 to 10% of your total account balance. I would not recommend going higher than that. The thumb rule, I guess you could say, is usually only 1 to 3% of your account. So if you have a $100 account, you're only risking about $10 per trade. A lot of people like to just ape into trades and think they can start making millions, or they think they can get rich from random posts from people or things like that. But the key is you really need to know how to scale your account and know about win rates and your loss rates and have a strategy in place so you can take profitable trades and make sure you are profitable in trading. You need to treat trading like a business. I know for some of you that may not sound fun, but that is exactly what I do with trading. I have a set scheduled time when I'm going to trade, so I'm completely focused on it. I know when to take my trades, the exact entry points I'm looking for, and the exact exit points I'm looking for, and knowing how much profit I can make and how much I can lose based on that trade. When you look at trading, it's basically like flipping a coin, right? It is a gamble. There's only one way the market will go. It's going to go up or it's going to go down. So you can take a long or you can take a short. And if you're gambling, those aren't too bad of odds. You got a 50-50 chance. So what you want to do is be looking for the best possible setups and entries to make sure you are profitable. So first, we're going to take a look at this first rule here. Begin by risking a set percentage per trade. If you're starting with $100 and maybe $100 isn't that big of a deal to you based on your monthly income, you don't want to be starting out blowing your mortgage, blowing your electricity bills, or blowing your water bills on trading. It's going to take some time to learn and get used to the charts and see how it feels. You're going to have to learn your emotions, discipline, certain systems and strategies, different technical analysis skills, and how much you should be risking per trade. So if you haven't traded before and you want to practice this strategy, that is what I would highly recommend. You're going to need to get used to price action, volume, the coin, things like that. I would recommend stick with one coin you want to trade, pick that coin and become used to that price action and just trade that. Because when you're hopping around a bunch of different coins, they all have different price action. Even though a lot of them follow Bitcoin, they will have either very big bars or very low bars. It's just going to be different looking and different price action when you're getting used to some. So you'll notice like Sol here has a lot more jagged as opposed to Link has these just straight bars going down. So you are going to pick one coin to start out with. I only trade Solana. Usually I do trade Link or ETH or Atom here and there, but Solana is my go-to. It has a lot of good bounces, a lot of good price action and things like that. But to start out, you can just click that bottom panel there. Sorry, I went quick. It's the square, maximize panel, and you can select paper trading just to start paper trading. So once you have that selected, I'm going to show you leverage here and how you want to be entering quantities and taking your positions. So this was a trade from earlier. My stop loss got me out. I put it above a fair value gap here, but this would have been sweet, probably $1,000 trade. I got out around 200 bucks, I think it was, but that is okay. I did think it was going to go down to here, but anyways, I will show you this strategy coming up. So let's say we have our fib line here. Okay. And we're going to enter at this 0.618. Sorry. And this is just going to show you leverage and everything else real quick. if we take a short position on this, and I'm just going with the trend, you always want to go with the trend. I'm not going to say always, sometimes there's reversals, but usually you want to be going with the trend. So I would only be looking for shorts today just because this is such a downtrend. Anyways, we want a 3-to-1 risk reward ratio. So when we're thinking about risk to reward ratios, we want to look at this chart here. And most pro traders, I would say, are about 60% profitable in this category. But when you're just starting out, you're going to lose trades. You're getting used to the momentum and how it works and entering your trades and your quantities and things like that. So I would put yourself somewhere in the 20 to 30%, maybe 40% category and go from there. But we usually, this is a standard, usually you want to be looking for a 3-to-1 risk reward ratio. This means if you have a $100 account, you're risking 10% or $10, you will gain $30, okay? So this chart here means if you win trades 30% of the time, and I know that seems really low, you will still be profitable. It's when you hit the 20% mark that you're no longer profitable in this area. So usually I am looking for that 3-to-1 risk reward ratio. Now you can go up to 4-to-1, 5-to-1. It depends on how the market is moving and things like that. If you can get more out of the trade, or if the market's kind of changing direction, you're going to have to play that game as well. So you need to win 30% of your trades in order to be profitable on the system I'm about to show you. So we're going to get into leverage here. And so back to this original statement, but if we were, say, we're entering here at 0.618, right? Our quantity, we got to set our stop loss. So you'll notice as I move my stop loss, the quantity amount will go up or down. So my stop loss, this would be huge and do not recommend. Our quantity would be 10, okay? So if we're doing this short position here, you can come over here to the left, select short position. Let's say we're entering at the 0.618. We're going to take profit at the 1.272. If we go higher, our quantity is only 9. If we go lower, our quantity is 31, okay? So we're trying to find a balance between our leverage and between how much we want to risk and our risk reward ratio that will make sense for our strategy and becoming profitable in this business. So usually if I'm entering at the 0.618 here, I'd usually put it above the next fib line, which typically would be, I usually don't count the 0.5. This is a huge range I took today though, but I still wanted to show you guys this trade. Usually I'm in the 1 to 3% range or 1 to 2.5. This, however, was 7%, just because I couldn't find a good place to put this fib on this line. So there's certain areas on the graph that instantly stand out. So we have this area that would be a good place to put the fib. This would be a good place to put the fib. If we're taking longs, here to here would be a good place to fib, or even these two stick out to me. But any points that kind of stick out on the graph, that's where you're drawing your fib lines to, from bottom to top or top to bottom. So here's one, here's some up, here's one up, here's one. So stuff like that. So that's how we're going to be drawing our fibs for entries and take profits. But let's just say this is where I put my fib just because I honestly didn't know where else to go. So it was a bigger range today. That is okay. But we have the 0.618. What we're looking for is our quantity. So we have a 25 quantity. I usually like to put it so we have this nice fair value gap if we're looking for a stop loss. And we have some resistant points. So I would probably, there's some resistance candles here. This is right above the 0.5. And we want our stop loss to be tight. Not too tight where you're going to get whipped out incredibly soon, something like this. You want to match it up with support and resistance lines. So like we have this green line here and these candles are wicking through it here. So you'll see these come down nicely through it. I would probably put my stop loss just above the 0.5 here, to be honest, just based on that. And then we also have these resistant lines here. You can also see we have the big fair value gap right here. This one's more tiny. I've noticed the larger fair value gaps tend to do a little bit better in terms of reaching it. Yes, it can still reach the smaller fair value gaps, but usually it's the larger ones you're looking for. So to be safe, I'd probably put it somewhere around there, at least, because we got these points ticking down into it. Got this fair value gap. But I would put it just above this line here in case these whip down, and just above this top candle here. So if that's our stop loss, this is the quantity we are going to enter on this trade. And let's see here. You'll say we have a nice 3.32 to our bottom 1.272. Depending on price action, I'm either aiming for 1.272, 1.618, or if we're really going downhill like this one did, 2.272. So those are going to be our take profit levels. So once we have this mapped out, say we have a $100 account, you can put your account size right here. So whatever your account size is, and you can put a percentage, say we're doing 10%, or you can put how much you actually want to risk on the trade. If you're more comfortable starting out risking $10, you can do that. I'm going to hit OK, and then this, see our quantity change, because now we're on a $100 account, not a $1,000 account. So 100, 1,000. So 45 versus the 4. Verse 4. Okay, so this is the quantity we're looking for, and this is based on where your stop loss is and where your take profit is. All right, there's a lot of trading platforms out there. If you are in the US and you don't want to have a VPN, I currently use Surfshark for a VPN. I'll put the link down in the description. But BloFin actually accepts US traders, so you can create an account here. You just go over here to sign up and create an account. I have a link in the description. So you can start trading perpetual futures. So MEXC has very little fees when trading. However, if you are in the US, you're not allowed to trade on this platform unless you have a VPN like Surfshark or something, and then you're in a different country. So you can use either one of these platforms depending on what you prefer. So to put in this trade, so we have a $100 account, we're risking 10%. That means if we lose the trade, it hits our stop loss, we lose $10. If we win the trade, we get about $30. Okay. So we'll put in the quantity, and we're taking a short at 0.618, so 158.37. So off to the right hand side here, we will go ahead and put in 158.37, and our quantity is, so we'll just round this to 5. So you can see here, if we buy 4.5 SOL, our margin is at $17.81. That means we're using about $17 of our account to buy this trade because we are using 40x leverage here. So you want this to be isolated. Cross, if you have other money in other accounts, it'll basically take money out of those accounts if you do get liquidated. So you want to be careful with that. Just use isolated. And then I'm usually around 40 to 60x. Like I said, this depends on your account size. But if we're starting with $100, risking 10% of our account, you can see our long liquidation price down here and our short liquidation price it'll give you. And this should look similar on BloFin and other platforms. So if we come here and we can actually make sure our liquidation price hits it like somewhere in here where it liquidates us. So looks like our liquidation price is what, 160.67. So we are out of reach for our liquidation price, meaning it will hit our stop loss, we'll lose the $10 and we'll be fine. Now, if our liquidation price was, let's say, here, 160, then we would get liquidated, meaning you're going to lose more than $10. I forget how much more, but you will lose more than $10 if you do get liquidated. So be mindful of that. But you can see both of these down here. So using a 40x leverage, you are basically, and you can go up a little more if you want to risk it. We will see how this adjusts. So 60x, you'll notice our short liquidation price has adjusted to 160.37. So we are now, this is what you want to be mindful of. So if your stop loss is here, at 160.66. Your liquidation is here. That's too much leverage because you're at 160.37. So you will get liquidated if it goes up that far. So that's why I usually keep it around 40 leverage. Once again, depends on your account size, but you can play with your stop loss and your liquidation price down here. So people do say leverage trading is risky. They're kind of scared with it. I would say based on recent experiences, you can be scared of it if you have a long trade in the books. However, I'm playing on the 1 minute time frame. I'm getting in and out of trades, I would say, within 1 to 3 hours. I'm not taking a trade with leverage over weeks or months at a time here. Okay. So I know my liquidation price. I know my stop loss based on the system I am about to show you. But this is how I would do it, and this is how you would effectively scale your account. So we have 10% of your total account balance. As your account does double, keep your risk at 10%. So let's say you make $200, now you're risking $20 instead of the $10, which you can adjust with the quantity here, right? So we have 200, we're still risking 10% of our account, and you'll see our quantity jumped up double. Now, if you get to a number when you're doubling your account or tripling your account, if you're like, that is too much risk, maybe $100 is a lot of risk for you, or $500 is a lot of risk for you, and you aren't comfortable risking that, drop it down and keep it where it's something psychologically you can handle and you're not going to become over emotional about. You need to be able to, I don't want to say control, but handle your emotions and discipline effectively. So if you do lose that $100, you're not bothered by it. Or if you lose that $500, you're not bothered by it or constantly watching the charts throughout that time period where you already entered the trade. You basically want to take a trade and leave it until you hit that take profit level, which even I have trouble with, and a lot of pro traders do as well. You basically have to maintain your emotions and maintain your discipline. And there's a lot of trading books and trading psychology books that help with this. I've been reading over the past couple years or so. So it's always helpful to go back to those and read. But this is how you would effectively scale an account with little to no capital just by using leverage on any one of these platforms, which is awesome because a lot of stock trading platforms don't even allow that. You're more trading with futures and stuff like that. I know Top Step has some great information, which I want to dive into as well. Now let's get into the overall strategy with you guys that's allowing me to make these type of profits pretty easily and quickly, depending on the price range I take. Today was a little bit different, but that is a-okay. As long as we're following our rules and strategies, you can do the same. So the first thing you want to do before you even start aping into trades or anything like that, look at the chart before you start your day, always. Determine if you think it is a downtrend or an uptrend. So this, clearly, we have a downtrend, right? The next step is drawing your trend lines, just like I'm doing here. So I drew this trend line. I'm on the 1 minute time frame. I would stick with Solana if I were you guys, but you can feel free to trade Atom, Link, any of the millions of hundreds of coins out there using this strategy for perpetual futures. Solana is just my go-to. I know the price action. I know what's going on with the chart. I can recognize stuff when I see it just because I've been trading it for so long. So comes with habit and watching the chart for thousands of hours. So draw your trend line. Start with the top to here. But you can see here's a high. Here's a lower high. Here's a low. Here's a lower low. So we can easily see with all these that we're probably more than likely in a downtrend. So I would be looking for shorts today, personally only. And this helps us increase our probability chances of winning more trades simply by following the trend. The trend is your friend in trading, and that is a big rule. Even with this resistance I saw here, and that's why I was in this trade for 3 hours today just based on this resistance, but I just held it and was like, whatever. The trend is short. We have a lot on our money flow here and everything else. So I stuck with the trend. Next, like I said, we're drawing our trend lines. So this also takes some practice to get used to if you haven't already done this. You can practice, you can do bar replay on these charts just by hitting replay up here so you can't see the chart, especially if you're paper trading. You can close out a replay, whatever you got to do to get some practice in. You're not going to be good at a skill right away. You got to think about when you went to college, how long that took to learn something. You got to think about your career, sport, music, anything. How long did it take you? Even kids, right? They take 2 to 3 years to learn how to walk, how to talk. Same applies to trading. People make it look easy, but it does take months or years to get the hang of. However, if you focus on one coin or one strategy, you can probably get there a little bit faster just because you're going to be able to recognize the patterns and price action and things like that. So I do have a bunch of trend lines drawn here. And I get this trade already played out, but I just want to show you guys the overall strategy. This typically is a lot bigger range that I normally like to look for, but what I normally like to look for is a 1 to 3% range. However, we did have the whole Trump thing happen on Sunday where he announced the strategic reserve finally. So we saw that big pump up, as you'll see over here, just massive. I mean, I wouldn't enter here, but if you did. So now we're just going back to this resistance zone again. But draw your trend lines. So first step, determine the direction of the trend. If it's bullish, we're going to go longs. If it's downtrend, we're going to go shorts. So today I was like, okay, we're going shorts. Drew out my trend lines. Here's some good ones here as well. I didn't see this right away. We even had a retest. Almost a retest here. Pretty close of this trend line. If you see a retest of a trend line and it start to flip, that's another good sign. It's probably in that move downward. So we have our trend lines. This is a good channel here. And then what we're going to do next, grab your fib off to the left-hand side, and we're going to mark some key points here. And I'm first going to start drawing this from bottom to top, the opposite way of what you normally should draw. So you'll see we have some key areas here, usually are 0.618 or 0.5 or 0.382 or 0.17 are key levels to hit. Usually I like if there's some resistance. So if you see a lot of candles coming into one of those fib lines, like this 0.5 here, I thought it was going to reach up and hit that. So I actually had to mark it into this trade. And I marketed it and not even at a good point. I think it was like right here because I thought, oh, here's the tank. But it ended up resisting for a couple of hours. But it never did hit our 0.5. It just hit the 0.618. It did grab this fair value gap, which was nice. So usually you'll see it even hit that midpoint on the fair value gap, which would be right about here if we drew a midpoint. So it did hit that, but that would be additional confluence with the fair value gap if you were looking at that. I'll just mark these areas. And you're never going to hit, I mean, you're not always going to hit your entry perfectly. I wish that was the case. You can make a lot more money that way. Sometimes you don't. Just kind of got to roll with the punches here. So next, we're going to do this a different way. And let's say we are going against the trend and we're taking a long trade. So from this first wave up, we're going to go ahead and we already have our fib lines. Let's say we haven't entered this trade yet. Once again, we're not doing that, but say we took a long here, it came down, hit our 0.382 for entry. All these fib lines I like to use as entry points, right? This is where we want to be setting our quantity amounts to place an order. Our take profit amounts are going to be at 1.272 usually or 1.618. If it's really good, it'll hit 2.272. So be mindful of that. But let's say this first initial move up, and I never recommend going against the trend, but let's say we took a long here, okay? So first initial move up, we took a long, it hit our 0.382, and it came and hit our 1.272 for a take profit. So you'll notice our 1.272 lines up pretty perfectly with that 0.5 and this fair value gap here. Our 1.618 lines up pretty well with that 0.382 we had drawn. So this is just an additional confluence you guys can take to take these trades. And we have it marked here. So just re-show the fib. So draw the fib backwards, how we found that mark for entry. We got the 0.5, matches up with this fair value gap, which is very nice. Usually starting out, you're only going to win, 20, 30, 40% of your trades. And then here if we take this first wave up, Fibonacci, here to here, we have this 1.272. So that is where I would take my initial. So what you would do then, take a short. There's our price, 159.78. So I'll just show the fib there. And our target profit is either going to be the 1.272 for a 1-to-3 risk reward ratio, or we can go for that 1 or 5-to-1 risk reward ratio, however much the market's moving. Okay. And our stop loss, we have this fair value gap here. We have a lot of resistance here. So our second initial fair value gap is right here. I would probably put it, usually it's just above the candle. So you can put it somewhere. It'd be wary kind of the spot though, how it's coming down into it. So you also have this fair value gap here and this one. There's going to be a lot, but there's also this part here. So my quantity was originally around 45. I was just playing with this resistance here. You're just going to look to the left of the last line that came down. And I was playing with this fair value gap and this fib line. Usually I like it to be somewhere above the next fib line up and the candle. So you'll see there's this resistance here. So the fib line up, the fair value gap, and the candle. That's why I put an amount for 45. It's a little off, but yeah. 45 there if I was taking that 0.5. Like I said, I had to mark it into this trade because I was like, this is going to tank. So it only came up to that 0.618. So I did end up marketing into this trade. It's not my favorite thing to do. It's a lot riskier, and I lost some profit that way, but it is what it is. So I guess I wouldn't have made any profit had I not marketed in. So there's that play as well. So you'll see it just missed it by a hair here. We were pretty close, and it even resisted around this range for quite a while. So just have this play out here. Comes back up, almost hits it again. But like I said, we just hover at that 0.618. And this indicator here, it's a money flow. It's pretty cool, actually. It's just by Lux Algo money flow. So money flow profile, Lux Algo, and it shows the amount of sellers and buyers coming into the trade. So you can see there's a crap ton of buyers now. We'll just watch it. Let's kind of think somewhere around here was where I marketed it in at, right below the 0.618. So not a great entry, I will say on my part, but we'll keep going. Almost hit our 0.5 again. Got some reversals, and this is a supply and demand indicator. I don't like to use too many indicators, but just to show you guys in case you're interested about them, it's just that one there. So we'll go ahead and play this out. Resisting forever and ever, but we still have a lot of sellers on our money profile, so I was okay with that. The other thing I look at is this RSI here. So for the RSI, these are the inputs I use: 7, source closed, SMA 3, and then you should be able to get highlights like these. So when you get a highlight, usually it's time to exit a trade, which I could have made profit here and just exited and took another trade. Probably been fine, but let's keep it moving. Get my MACD up as well. So our MACD was bearish here. It's going bullish now. Once again, we're on the 1-minute time frame, so it's going to fluctuate pretty heavily. You'll notice we got a big downtrend here. So when you get a huge candles like this, is considered like a change of character. So it bypassed this point. It bypassed these candles, and these are pretty big red candles. So that's considered a change of character. So now we're going to move downward. You'll see our MACD is bearish. Even though we got a bullish divergence here, it doesn't really matter. And you'll see it just tanks from there. So now when we're looking at our take profit levels, so let's say we had placed this order, 158.37. I know it didn't hit our zero. Oh, 158.39. Say we placed it at 0.618 instead of 0.5. We open short. So there's our short position, right? So it would take it. Once it took it, starts heading down. We can also place our take profit level. So we can put in And to save on fees, you can go ahead and go 150.99. If you wanted to split this quantity in half, let's say we want to sell 4.5 at 1.272 and 4.5 at 1.618, you can do that here. But let's say I just want to get rid of the whole thing at that 1.272, 150.99. You would hit close here, and then you could just close short. So when you're looking at take profit level, look for the previous fair value gaps as well. So you'll see we got these huge ones down here. So this would have been good, 1.272. This is another good fair value gap to hit, 1.618. This one seems a bit far to me. This is risky. Could you take it? Sure. But I'd be looking confluence for these fair value gaps for take profit levels, as well as these 1.272 and 1.618 marks to put in your price there. So that is how you would take profit. The other confluence is going to be this red highlight because we're going short. If we're going long, it'll be green. But you'll see red highlights appear on this RSI here. Usually if you're in the direction of the trend, you could see 2 to 3 of these normally before a complete reversal, just to stay safe. Sometimes you'll see more, obviously, but just to play it safe, usually I like to see 2 to 3 of these down there. So here's one, here's the second one. We even got a third one here. And then it almost popped back up to bullish, but it just didn't have the strength. And now we're all the way down here. That is how you would take that trade. But that is the system you guys can use. Just draw the fibs. Hit that 1.272/0.5 is the sweet spot. And follow that system completely and you will be all set. You will not win every trade, especially if you're just starting out, but I will say this is a great system to get started with and start learning how to trade and see the profitability you can make to get good and become a business owner or start stacking income trading. So if you guys do have questions, please let me know in the comments below. Look forward to helping you all out and I will talk to you soon.